Is the UK property market about to crash? Is this potential financial disaster for many people, or is it actually the opportunity of the decade? We've seen property prices skyrocket during COVID, correct and start to come down because of inflation. We've seen interest rates go up, which has affected affordability for homeowners and also for property investors. So what exactly is going to happen to the property market? And what do you need to do about it? And why should you listen to me? Well, my name's Simon Zucchi. I'm the founder of Crowd Property and the Property Investors Network. Crowd Property is a peer-to-peer lending platform, and we have lent almost £450 million to support £800 million worth of developments. So I know quite a bit about lending and borrowing money. And as the founder of the Property Investors Network, which was the very first pioneering networking meeting in the UK, especially for property investors, I've been helping people like you to become more successful investors for the last 22 years. So I think I know a little bit about property investing, and hopefully watching these videos, I can impart some of that knowledge to you. So let's get on with this particular video. Lots of people are very conscious of property market cycles, and they want to buy at exactly the right time. Let me give you my view about property market cycles. Now, there's no doubt that there are certainly trends within the property market. However, I've seen all too often that something can happen, there can be some government intervention that breaks the normal pattern. For example, towards the end of 2019, many people felt property prices were too high and we were going to see a correction where prices come down. However, in early 2020, when COVID hit and the Bank of England was saying property prices might crash by 16%, the UK government stepped in and introduced several measures to prop up the UK property market, such as introducing the stamp duty holidays and also the bounce back loans, which weren't meant for property, but many people used that money to put into the property market. As a result, we saw an unexpected boom in property prices during the COVID years. Now, what happens when prices go up too quickly, suddenly deals don't stack up, people are expecting too much, and the market stops. And that's happened, and it starts to correct down. Add to that interest rates going up as a result of inflation, and it means that suddenly properties are not as affordable for many people. So right now, you've got a lot of people who need to sell their properties, but not that many people looking to buy. That's why it's called a buyer's market, and it's in the favor of buyers. So if you want to buy property, it's always best to try and buy during a buyer's market because there's lots of supply, not much demand, and you can find the very best prices. Now, the reason some people say they think there's going to be a property market crash in the UK is because prices have stagnated. If people really need to sell, they're dropping their prices. A lot of people say in London, you've seen commercial property almost half its value. So what does this mean for you and your property investing? And are UK prices going to crash? Well, personally, I don't think that it's going to happen. Yes, I think there's an affordability issue. Yes, I think there are many sellers who need to sell and there aren't enough buyers. And so some sellers are definitely more flexible. But we need to look at the macroeconomics in the UK. And the reality is we do not have enough accommodation. Now, what that means is the government and also the Conservative opposition both said in their manifestos we needed 300,000 new homes a year for the next 5 years. That's 1.5 million homes, which is just too many. We're never going to build that many. So the reality is we're not keeping up with the demand for accommodation. And normally what happens when you have a market crash, there's a lot more supply than there is demand. But with this underlying demand, I can't see the market crash. Now, what I'm going to talk about next is what actually happens during a property market crash. Depending how old you are, you may or may not remember this, but the last major worldwide property market crash was in 2007 and 2008. It started in America because of the toxic debt that was packaged up in mortgages and sold to many financial institutions and then sold on and sold on. The reality is a lot of that debt was never going to be paid back because in the early 2000s, both banks and borrowers were very irresponsible when it came to borrowing. There was irresponsible lending and irresponsible borrowing that meant that people could just sign and say, I can afford to pay a mortgage. There are no checks at all. And frankly, people who shouldn't have had mortgages were given mortgages that they were never ever going to pay back. Now, this came to light in 2007 in America. By the time it hit the UK in 2008, people realized that actually property prices were massively overvalued. There were a lot of mortgages that were never going to be paid back, and we had a severe property market crash. One of the challenges was the fact that it was very difficult to get finance. So when you have a true market crash, banks don't really want to lend property because they're worried about the loan to value. Now, surveyors who banks rely on to value property, when the market comes down, they get very, very cautious and start down valuing things. Because if they overvalue things, they might get people claiming on their professional indemnity insurance, and they're very cautious to protect that. So one of the things we are seeing right now, which is a bit of a negative side, is many surveyors are being very, very cautious on their valuations. Frankly, they're just trying to protect their back. They might say they're trying to protect the lenders. But it's interesting, when surveyors start talking about a market downturn, it's actually a self-fulfilling prophecy, because they think the market's coming down, they start valuing things lower, and that causes the general prices to come down. So surveyors is a slight area of concern. But what does this actually mean for you? Does this mean you should sell everything now while you can? Does it mean you should jump in and buy everything? Well, it's interesting. If you're trying to wait to the time when the market hits the absolute bottom and then buy, I've got some bad news for you. It's never going to happen, because no one knows when it's actually hit the bottom. And when it has hit the bottom, and everybody, including you, all the other investors, the general public and the media, when everyone thinks it's hit the bottom, what happens next? Well, at some point, the market will start to recover. So all those sellers, knowing it's hit the bottom, think, well, I don't want to sell now because I want to get as much as I can for my property. And they hold on to their property with the hope that someone else is going to come along and pay more. So actually, at the very bottom of the market is not the best time to buy. If you want to pick up some great deals, it's when the market's coming down, when sellers are scared and they will just want to get rid of the property and dump the property. That's the best time to buy. Now, the risk for you as an investor is you could buy something today that 6 months later might be worth less. Does that mean you've lost money? Well, no. If you're looking to buy and then sell, and you sell for less than you bought, well, of course you've lost money. But true investors create true wealth by holding property long term. So to a certain extent, it doesn't actually matter what happens to property prices as long as you're holding for long term. If you buy something and it's slightly less in value in a year's time, doesn't matter, because of the long term trend, the value will go up, because we live in the UK on this island with a limited amount of accommodation and an increasing population. So as long as you're holding for the long term, it actually doesn't matter what happens in short-term prices. And when the market comes down, it's a great opportunity to buy property at a much better price than you could when the prices were at a peak. Now, if you are investing in property, I highly recommend you follow the 5 golden rules that I talk about in my book, Property Magic. Let me very quickly outline those for you. Golden rule number 1, we always want to work with motivated sellers. These are people for whom maybe the speed and certainty of the sale is more important than how much they actually get from the sale. And in a buyer's market, there are a lot more motivated sellers. When the market's coming down, there are a lot more motivated sellers. So now is a great time to be buying deals, as long as you follow the other golden rules. Golden rule number 2 is we only ever buy a property in an area with strong rental demand. There's no point buying a cheap property if you can't actually rent it out. But if we buy a property in an area of good demand and we know we can rent it, then you've got a stable income generated from that property. And that links very nicely to golden rule number 3, which is we only ever buy property that give us positive cash flow. What that means is you take the rent each month, take off the mortgage, the insurance, the management fees, the maintenance, all the costs, and there must be some money left over. That's your profit. If there's no monthly profit, that is not a good deal. And sometimes people buy property hoping it will go up in value, and it might well go up, but we don't know how long that's going to take. That is more like speculating and gambling. Whereas if we know it's giving us cash flow and giving us a return, that is investing. We're investing now to get a return now, and the long-term capital growth is the bonus. It's the icing on the cake. Golden rule number 4 is we are buying for the long term. Rather than trying to guess the market and buy and sell, if we buy and plan to hold for 10, 20, 30 years, the prices is always going to go up over that long-term period. And then number 5 is we need a cash buffer. Some money put aside. It could be some money in a bank. It could be money on a credit card, but some money that we can use to fix the property in case it's damaged that's not covered by insurance, so we can quickly get it rented out and make it a cash generating asset for us again. So if you follow the 5 golden rules, you're really minimizing the risks. And particularly if you follow rule number 2, 3, and 4, i.e. you're buying in an area strongly into demand, you know it gives cash flow and you hold it long term, what does it matter if the prices come down? So while everyone is panicking, losing their head, recognize that's often a great time to get into the market. So do I think the property market's going to crash? No, I don't really think, given everything's happening right now, that's going to happen. But if it does, well, fantastic. I'm going to be buying a lot more property. I hope that helps you. I hope you got value from this. If you have, please like the video. Comment below. Do you think the market's going to crash, stagnate, or is it going to go up? What do you think? Come and comment below. Make sure you subscribe to the YouTube channel and hit the bell icon to get notified every time we bring out a new video, to make sure you don't miss any of these topical videos. Until next time, I encourage you to invest in knowledge, invest for skill.